Hello and welcome to InvestFlow. Today we'll be looking at Crowdstrike, one of the high flyers in the cybersecurity business in the last few years. The stock has had a great run up and has come down a lot in the whole tech correction in the last few months. So let's take a look if the company and the stock is a good investment opportunity. Crowdstrike, ticker symbol CRWD, has a market capitalization of around $47 billion. They currently employ around 4,000 employees. The company was founded in 2011 and is headquartered in Sunnyvale. They are operating in the cybersecurity space, and the current CEO is also the co-founder George Kurtz. If we take a look at the share price, we can see that since the IPO in May of 2019, the stock at first traded sideways for about a year, and then with the whole corona pandemic starting, really took off. Went from around $50 per share all the way up to 250 at the peak, which would be a 400% gain. Since then it gave some feathers and went down back to around 160, 170-ish. So a pretty nice correction in the stock price and maybe a good opportunity to invest. If we take a look at the shareholder structure, we can see a lot of known investors like Vanguard or the BlackRock funds or T. Rowe Price. They also, which isn't in this overview, but the CEO also owns 7% of the shares. So that's something I also always like to see if you have an owner operator, so a CEO or other high management position that owns a significant amount of the shares outstanding. If we take a look what the analysts have to say, we can see that almost all of them are bullish for the company. 2 of them have a hold rating, 8 of them an overweight, and 22 have a big buy. The lowest price target still has an upside of around 3%, and the highest price target has an upside of almost 80%. Let's take a look at the business model of Crowdstrike. Crowdstrike sees themselves as the next step in the cloud computing innovation. The first step of the innovation was the original cloud from Salesforce in CRM. Then there were other companies popping up like ServiceNow for service management cloud solutions or Workday for human resources solutions in the cloud. And since 2011, Crowdstrike really innovated the world with their first security cloud. So let's take a look why you would use Crowdstrike over one of the legacy solutions. They are cloud native, so they eliminate complexity and simplify the deployment to drive down operational costs. For example, instead of using one of the legacy solutions like McAfee, where you have to install the software, for example from a CD even, you just log into your Crowdstrike account and then it's all handled in the cloud. They are AI powered, so they can harness the power of big data and artificial intelligence to empower the team with a instant visibility. And they also have a single agent which delivers everything you need to stop breaches, providing maximum efficiency on day one. Crowdstrike is promising a better protection by using the entire threat lifecycle, by protecting the entire threat lifecycle by combining machine learning, artificial intelligence, behavioral analytics, and proactive threat hunting with their threat graph, which is the security platform that they developed themselves, the analytics platform. They also offer better performance with a single lightweight agent which works everywhere, including virtual machines and data centers. So even endpoints that are offline can get help by the solution of Crowdstrike. They also offer better value. The protection will eliminate on-premise infrastructure and consolidate all endpoint agents to one single platform. If we take a look at the financial performance of the platform, we can see that they currently have around 1.7 billion in annual recurring revenue. This revenue had a growth of 65% compared to last year. over 94% of their total revenues are from subscriptions, with the other 6% being service revenues. The subscription revenue had a growth pretty much in line with the annual recurring revenue of 66% year over year, and they currently have around over 16,000 customers. So they don't really rely on a few single big customers, but rather have a large amount of smaller customers, which is always good because you don't really want to have the risk of one of your biggest clients leaving and as a result revenues potentially even falling. Over 69% of subscribers also have a lot of modules, in this case 4 or more, which is always good because once you get a customer, you can then upsell them into more of your products and thus increase the revenue per customer. Let's take a look at the different solutions that Crowdstrike offers on the platform. They offer a large variety of solutions like endpoint security, cloud security, managed services, security and IT operations, threat intelligence, identity protection, log management, Crowd XDR, and the Crowdstrike store. So we can see that there is a lot of potential for upselling with 1, 2, 3, 4, 5, 6, 7, 8, 9 different modules, and each of those having a lot of modules under them. They pretty much have a long runway. Even though already 69% of the subscribers are having 4 or more services, I think there's a lot of room to upsell them to all of the offerings they have. Here we have the subscriber growth visualized in a graph again. At the last report in January of 2022, we can see that they had a 65% year-over-year growth, putting them from around 10,000 customers over 16,000 customers. And here you can really see how exponential their growth has been over the last years. In 2017, they only had around 450 customers, and now it's up all the way up to 16,000. So if they can keep up this growth, they will be in around the 100,000 subscriber customer number in no time. And we can also see that 65 of the Fortune 100 companies are customers of Crowdstrike. 250 of the Fortune 500 are customers, and 15 of the top 20 banks are customers. So they have a lot of high-profile customers, which also should speak volumes for the reputation in the industry and the efficiency of the platform. Here we can once again see the amount of customers with 4 or more offerings they are paying for, and we can see that since 2019 this number went from 47% all the way up to 69%, and is expected to grow further in the future, I would assume. So this once again shows how good the upsell potential is for Crowdstrike, I mean, of course. And we can also see that the amount of customers with 5 or more or 6 or more is also pretty high, but should increase further in the future, I would assume. Let's take a look at the advantages of a cloud-native solution for cybersecurity again. We have 3 main factors. One of them is the data access. With the solution being a cloud solution, you have a constant protection, no matter where you are, no matter when you're accessing it. With the data analytics, you have an algorithm that's continuously learning with every single breach attempt. And then we also have the data reuse aspect, which I mentioned earlier before. Once a threat is collected, then you can reuse that knowledge in the future many times, hundreds of thousands, millions of times. And basically the platform gets stronger every day and will continue to get stronger into the future. Let's take a look at the retention rate. One of the most important aspects to look at for software as a service companies are the net dollar retention rate, which basically means that if you have a customer, how much they are gonna pay in the next year. So a value of 100%, would mean that a customer, which for example paid $100 in the last year, will pay $100 in the next year. So a big warning sign would be if this net dollar retention rate is below 100%, and above 100% basically means that they are selling more of their services in the next year. And for Crowdstrike, we can see that this value has had a great uptrend from 2018 to 2019, going from the low 110% area all the way up to almost 150%, which is an incredible value. Since then it traded down to around the 120 range, which is still a pretty great value. And below here we can also see the churn rate, which pretty much means how many of the customers quit the service. And values around 97%, which they have been pretty consistently in, are pretty great for that. So that means that only 2% of their customers stop paying or switch the solution per year. Crowdstrike also has a pretty large total addressable market. At the IPO in 2019, the TAM was estimated around 25 billion. Since then it increased more than doubled to 55 billion, and they are expecting, with the current portfolio of services, to reach a 67 billion total addressable market by 2024. In the future, with the four factors: organic TAM growth, product roadmap, future initiatives, and the whole cloud security opportunity as a total, they are expecting to reach a 116 billion total addressable market in 2025. So basically what that means is the entire market where they can compete is around 116 billion potentially, but we should expect them to just capture a fraction of that market. But still, it's always important to look at the potential that's out there for a company and their services. Before I continue with the video, I would like to ask you to thumbs up the video and subscribe to the channel. I would also appreciate if you could leave a comment down below and share your thoughts on the video and the company, if you're invested yourself or if you're planning to. Let's take a look at the numbers for Crowdstrike. In the last calendar year that ended, we can see that they had a revenue increase of around 66%, going all the way up to 1.4 billion. The net loss also increased though, going from a loss of around 90 million to 230 million. The gross profit went up pretty much in line with revenue to 1.07 billion, which means an increase of 65%. The EBIT also went down, not as much as in net income though. And they managed to increase their equity by around 20%, which brought the equity ratio down to 29%. The free cash flow was 440 million though, a 50% increase, which is always important to look at with growth companies. Having a free cash flow of 440 million means that the company is already self-sustaining and they are not losing money, which is, in my opinion, more important than the net income, which can easily be manufactured by doing fancy accounting. So that's a very good sign that they are already profitable in that aspect. Let's take a look at the valuation for Crowdstrike. We can see that the valuation came down a lot from 2020, but is still sky high. So the price to sales ratio is around 32 now. The forward price earnings is around 190. Price to book value pretty much is irrelevant for a SaaS company, but it is almost at 50. The price to cash flow ratio also came down a lot to around 80. Still high though. There is no PEG ratio that can be calculated since they aren't GAAP profitable yet. And the Petrovsky S-score went down from 5 to 3. The revenue is split into two parts, with subscription revenue accounting for 94% and services accounting for the remaining 6%. So we can see that Crowdstrike pretty much relies on their subscription revenues, which is a good thing for a SaaS company. Crowdstrike currently has a debt of around 740 million and a cash position of 950 million. So they have a net cash position of 211 million, which is a good thing. They are diluting shareholders though in a big way. Since the IPO in 2019, shares went up by around 30%, from 170 million shares all the way up to 230 million shares. Especially from 2019 to 2020, there was a large dilution with 40 million shares being distributed. Since then, they have been diluting at a steady pace of around 10 million shares a year. So investors have to take care of the trend here and see if the per share values are rising faster than the dilution. Analysts are expecting the revenues for Crowdstrike to keep increasing at a rapid pace. The revenues are expected to double from now until 2024 to almost 3 billion. The operating margin is expected to grow further from 13% to 15.5%. And the net income margin is expected to pretty much reach the break-even in 2024 with a negative margin of only 0.45%. So to summarize, Crowdstrike is a highly innovative company with strong growth and good retention rates, and with a nice future outlook in the product portfolio and the total addressable market. On the other hand though, they have a very high valuation, even now after the big drawdown from the highs. They also have a lot of competition and are in a difficult to see through market if you aren't an expert, in my opinion. Crowdstrike does have a good technology mode with their AI platform and the data analytics and reuse. The brand also is pretty good, but not on the best level yet. And they are still pretty new in the market, so I didn't rank the experience too high. But still a pretty good mode for a fast growing company. So now let's take a look at my outlook. They have a subscription model and a gigantic total addressable market. The company has high growth rates and a strong revenue retention rate. There are many cybersecurity stocks on the market though, and they are trading at a very high valuation and are steadily diluting shareholders. So for me, Crowdstrike is something I would put on my watch list and wait for further multiple contraction, because I really like the offering that the company is doing, and their metrics like the revenue retention rate and churn are pretty nice. Growth is also very good, but I just don't want to invest in a company trading at 30 times sales in the current market. If the valuation would go down to, like, let's say a 15 or 20 times valuation, I would definitely look into an investment further, but right now it's just too expensive for me. So thank you all for watching and I hope you enjoyed the video. Once again, please like the video and subscribe and comment down below.